people would be pretty happy with that. But the accelerant to that would be the approval of ETFs. Well, why is that an accelerant? Well, it's a demand shock, because what the ETF does is it opens up the opportunity to invest in Bitcoin to a larger group of people. And since I am a boomer, I can say,
hey guys, welcome back to Everyday Finance. In this video, Mark Yusko discusses the crypto and Bitcoin, according to Mark Yusko, with the release or approval of the ETFs. Mark Yusko had a strong conviction that they would be approved. It seemed like a promising prospect for the year. To speed up this gradual movement towards equitable value and fairness appreciation last year, he discussed the METAPS law model, which indicated a value in the low 50s. During the third week of April this year, Yusko, it seemed as though we were gradually moving away from the 30s and heading towards 50, with more and more people. He would be quite pleased with that, but the catalyst for that would be the approval of the ETF. Why is that considered an accelerant? It's simply a demand shock. Because the ETH provides an opportunity to invest, we witnessed a similar situation in Cyprus years ago, where a significant portion of people woke up to a 75% loss in their Bitcoin holdings. When your money was bailed in and taken away, or when the Hoya National Savings Bank your money might be at risk of disappearing if FDI isn't insuring it. Be cautious with amounts exceeding 1.25. Millions vanished into thin air. Yeah, so it's similar to working with a brokerage firm, where you would input your money. When it comes to money in a brokerage firm, it's important to remember that the stocks you believe you own may not actually be yours. They can be found in their names at DTCC or in the street names of UBs. Merrill Lynch. And once again, you have an IOU and it's slightly improved compared to the previous one. Debt owed by a financial institution. If the brokerage firm goes bankrupt, you'll be in serious trouble. If they go bankrupt, you become a secured creditor, which means you have a higher priority in receiving your funds. So please watch the video to end and share this video, and subscribe our channel Everyday Finance. Thanks.
I think we absolutely have met and exceeded expectations, especially because expectations changed very dramatically right after the release of or the approval of the ETFs. So, coming into the year, I was pretty convinced that they were going to approve the ETFs, and that was going to accelerate this slow trend toward fair value. And fair value, if you look at the Metcalfe's law model, we talked about this last year even, was somewhere in the low 50s. And so by the halving, and the halving is, third week of April this year, I thought we would drift, from the 30s up toward 50, and people would be pretty happy with that. But the accelerant to that would be the approval of ETFs. Well, why is that an accelerant? Well, it's a demand shock, because what the ETF does is it opens up the opportunity to invest in Bitcoin to a larger group of people. And, since I am a boomer, I can say it's a boomer wrapper for those investors that they're not really comfortable negotiating online. They don't really want to carry a ledger around. They don't even really trust Coinbase yet. So they're like, look, if you're going to put it in something I can put in my 401k or in my Schwab account, bring it. But here was the problem, is first you had to have approval, which, Gary Gensler had been against until the courts kind of ruled, or judge ruled against him. So he had to go ahead and approve it. But then there was a second leg, which we saw in the week after, and that's what I talk about expectations changed, is there were a lot of people said, oh, this is a buy the rumor, sell the news. It's already priced in. And we had the move from 30 to, I think we got all the way up to 47. And we said, oh, it's going to crash right after. And right after the approval, Vanguard, Bank of America, a handful of others said, no, just because you approved it, we're still not going to allow our clients to buy it. Now, think about what they just said.
Right.
They're telling us, humans, that the money that's ours, that we put in their company, we can't use to buy what we want. And I know you guys have experienced a lot with cannabis and other. It's just ridiculous. But what we forget, right, is in the trust industry, right, the entire industry of trust, banking, brokerage, insurance, all this stuff, that's the fact, right? You put your money in a bank, it's not your money. It's actually the bank's money. Look at the balance sheet. It's their money. Now, we have an IOU, and that IOU is good 99.9% of the time. That 0.1%, it's a bitch. But, and, Cyprus, we saw that years ago when, you woke up and 75% of your money was bailed in and taken away. Or when La Jolla National Savings Bank went under. All your money, unless it was insured by FDIC, so anything over 1.25 million, gone, vaporized.
Right. Yeah.
Mark Yusko understands that the bankers are not fond of this technology, correct? Bitcoin, in particular, eliminates the need for the trust industry. He discussed this in previous discussions. In the past, if Yusko wanted to lend you money, we had to rely on ledgers and someone to ensure their accuracy. The bank served as this trusted entity for 838 years, charging a hefty fee for their services. We placed our trust in them. Mark Yusko may have mentioned this before, but he often has a recurring nightmare. When he uses the ATM and sees a balance of zero, it's frustrating because he has no way to prove otherwise. He hasn't received a statement in years, so it's just his word against theirs. He has to trust that the bank hasn't stolen his money, although it would be relatively easy for them to do so. However, with Bitcoin, he no longer has to rely on trust. If Yusko owns a Bitcoin on the network and all the nodes agree that it belongs to me, he becomes his own bank. It's important to note that traditional banks are not fond of this concept. Some argue that these financial products have essentially created a paper market for Bitcoin, which has eroded trust in the system despite the fluctuations in price. Let's back to the Mark Yusko interview.
So, same thing with a brokerage firm. You put your money in a brokerage firm, it's now their money. The stocks that you think you own are actually in their name at DTCC. They're in the street name of UBS or Merrill Lynch. And again, you have an IOU, and it's even a little better than the IOU from a bank. A bank IOU, if they go bust, you're toast. Mm-hmm. With a brokerage firm, if they go bust, you actually are a secured creditor. You get to be higher in line. So it's a little bit better IOU, but still an IOU. So all of this comes to say that I think people misunderstood how important it was for them to finally relent. So in the past week, we've seen the CEO of Vanguard mysteriously retire.
Maybe do you think that was attributable?
Look, he was there 33 years. Maybe he was planning to retire anyway. But I don't know. I think he made a call, or someone made a call. I think they got a lot of pushback, and I think they're going to change their mind. Merrill Lynch has changed their mind. UBS has changed their mind. So people are coming around. So all that said, now we've had this massive run. We went from 47 all the way back. I think we hit 38. And people are like, see, I told you, sell the news.
Yeah. And
the stalwarts were like, that's a gift, right? I can buy more at a cheaper price. Now, if you, and I don't even call myself a conspiracy theorist, but if you believe, as I do, that if you're a large investor and you know that you need to buy a big old chunk of something, what is the oldest trick on Wall Street? What do? Right? If you want to buy a lot of something, you actually sell it. You actually spread rumors that it's lousy and you push the price down. I mean, Dwight Anderson used to work for Julian Robertson. He tells this story all the time. They wanted to buy a big position in copper. And he's like, all right, Julian, here's my report on copper. Let's go buy it. Julian's like, are you joking? We'll sell 50 million copper. And then you tell people that we're selling copper. because I want to buy more than 50 million of copper. I want to buy a lot of copper. And Soros would do the same thing. And I mean, so BlackRock knew that they were going to have to buy a bunch. Perhaps they were the ones telling people to sell.
Yeah.
Maybe. So, because
do you think
now...
you think that was the message? You think that was the message on Wall Street? Yeah.
Oh, absolutely.
Yeah, look at Jamie Dimon. I mean, look at Jamie Dimon. He was saying crypto was toxic. He was saying crypto had no place. Meanwhile, JP Morgan's been heavily investing in blockchain infrastructure as well as crypto.
Well, and they are the, what do they call it? The AP, the something party that you have to have a legitimate entity next to your name if you wanted to get approval for the ETF. And JP Morgan was like, oh, we won't be that. And so, look, I get it that the bankers don't like this technology, right? Bitcoin in particular replaces, it obviates the need for the trust industry.
Right.
We talked about this in past shows, right? If in the old days, if I wanted to lend you guys money, we had to have ledgers and we had to have somebody make sure that the ledgers were accurate.
Yeah.
That somebody was the banks. For 838 years, it's a long time, they took a very nice fee for making sure that our ledgers matched. Mm-hmm. And we trusted them. Mm-hmm. I mean, I don't know if I told the story on here, but imagine I have this recurring nightmare. I go to the ATM, I punch in my code, and it says 0. Like, how would I prove it's not 0? I don't have a statement. I haven't had a statement in 10 years. It's their word against mine, right? I'm trusting them that they didn't steal all my money. But if they wanted to, they could pretty easily. But with Bitcoin, I don't have to trust them anymore. If I own a Bitcoin on the network and all the nodes agree that Mark owns that Bitcoin, I am my own bank. So I understand that the banks don't like it.
According to Mark Yusko, we reached the all-time high on the very day the futures were launched. However, the price started to decline, and we ended up experiencing a significant decline of 74%. It is evident that the recent market downturn was not solely caused by financial analysts, but rather a result of widespread panic among investors. It seems that some individuals were caught up in the frenzy of buying and selling, regretting their past decisions and longing for what they could have purchased. There was a paper manipulation at the beginning, but this time things are different. These are spot ETFs, which means that when BlackRock receives an order or when Bitwise receives an order, Fidelity has received an order to locate real Bitcoin. Indeed, simply purchasing futures contracts does not equate to owning Bitcoin. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.